you've got market sentiment caused by things going on in the world, things changing very rapidly, um, assets that are heavily sentiment driven, like oil, like gold, things where you will see something in the news and it will tell you exactly what you need to know. It will tell you that there's a supply demand cut, there's fear in the market, whatever. Um, it drove price up from here where we called it long. You'll remember I called it long because we had significant key support here. It was unlikely, it was more probable than not, I would say, that you were going to bounce here because this is like a big stone wall just sitting there. Okay, you're bouncing the tennis ball on it and it bounces back up. And you had that. But now what you're seeing is market sentiment that is in regards to an increase in supply and short side trading, which of course is why this market is now falling from here. Okay, so around $90 you came up to, you've gone down 4 candles or you're on your 4th, and you're coming back to where you previously bounced twice already. So from a technical basis, that would make it a long. However, there's a couple of things I would mention with this. You can see oil as well just here. Okay, you can see that candle is very, very heavy to the bottom side. And if you drop your time frames to the 4 hour, etc., you can see you're really dragging into these lows, and this didn't really do much. So I wouldn't be shocked at all if you beat this low and thus beat these lows also. That wouldn't surprise me. So that for that reason, I'm not long with new entries just at the moment. I do have previous DCA entries, but it wouldn't shock me at all if you come under these lows and you return to this key moving average here. Okay, so you're 100, yeah, I think. You come to your key 100 moving average and you'll find yourself reflecting off deeper levels of price action. And that's a common theme within this. It's really common because what you've seen already is a bounce off of these levels here, which I'm highlighting. And this happens a lot in markets. You've seen your bounce off there because it coordinated with our previous long zones. Now the market is going to try the ones underneath. And you'll often find if there's heaps of price action, heaps of price rejection, like there is at this point that I'm labeling, you'll have to break each level down. Okay, so that's why that's the next long zone, and that's why I think you'll beat these lows, because if you tried these lows twice and they really haven't provided a significant push to the upside, they're just rejected immediately. Therefore, there isn't strength in the market, and that gives me a bias to re-long lower down about $80.7. Okay, it coincides with my key moving average, which is great because I know I can track price very well. And it also coincides with key levels of price action, which I can see to the left-hand side. If I flick my time frames up to the weekly, you can see that further because these were the levels that we tried first, and these are the levels that we're trying second. All right, so there's 2 layers here. There's layer 1, which you can see with this red candle, and then there's layer 2 underneath. And when you've got a drooping market, I mean, look at that candle, you can see there isn't long side strength there, okay? When you've got this drooping market and you've got problems with oil, people start to short. Now, you had tons of people, I mean, someone did ask me, I'm sure they're probably watching, so I'm sorry, but they said, you know, this can go up forever, why don't I buy it here? Why don't I buy this? And I said, you shouldn't buy it. Yes, the sentiment might be there, but if you wanted to buy it, do it at $67, man. Do it at $80. Do it on the dips. Don't buy after the move. Don't be one of those guys. Because if you buy after the move, you're always going to be too late to the party. Everyone's drunk. Everyone's had their drinks. They're all going home, and you're just turning up sober with a can of Coca-Cola. So, you know, that's the analogy I like to use. But you can see this weekly oil candle is dropping so quickly. Okay, and that really is an issue. I would say, though, I think you'll come under the previous low, as I mentioned. I'm just reading market news now. It's a lot changing. I would I would long under that low personally around $80.7 and in line with that second layer of support. If you look at the long-term oil market, you can see that you've had your push up and you're now having a pullback. And I don't expect this to fall straight through because you've got very strong monthly support all around this area as well. You can see all these candle wicks teetering around. And I think longer term as well, the sentiment's a bit more to the upside. But market's been ranging for a significant period of time. I mean, you have got somewhat of a falling market, okay, and you can see that like this. I mean, your lines would need to be parallel really, and it's very, very high up. On your long term, I mean, you're probably best drawing it on the 12 monthly. It looks like this, okay? But I wouldn't focus so much on the long term being down. I would just stick to monthly and weekly. But like I said, I think you'll beat the low and so I would hold off buying it.